Welcome, ladies and gentlemen, to Commodity TV and a new edition of our online interview presentation series. Today, we want to talk with an extremely well-known company, I would say, EnWave Corporation. You remember the dehydration company from Vancouver, or next to Vancouver. They are based, and we have Brent Charlton here, the CEO, with us. Welcome and good morning to Canada. How are you, Brent?
Very well, Jochen. Thank you very much for having us.
Yeah, thanks for taking the time, because I think it's very important to really get an update from you guys, because you were, I would say, a little bit hit by COVID, definitely, and you had some issues with the NutriDried, with the munchies thing. But I think the news of the last months, they were outstanding, and I have a very good feeling, especially with your last quarter, where you reported for the first time real profits, which we were waiting a long time for. Something is really here in the air, and it looks like EnWave was never ever in a better position, but the stock did not move. So I would suggest, which is good for new people to buy in, but also for the old ones to get some more shares for sure, like myself. And I'm a shareholder too of the company, and I would suggest I put up the presentation, and the floor is yours, and let's get started.
Okay, thanks so much for the introduction, Jochen. So today I'll go through a high-level introduction to our technology and company if you don't know the business, but also hit some pertinent updates, as Jochen astutely alluded to, in regards to our commercial progress, both with NutriDried Food Co., our operating subsidiary using our technology, and the commercialization of our patented vacuum microwave REV technology through primarily the food and cannabis industries. Before I begin, just quick disclaimer on some statements I will be providing are forward-looking, so please refer to our publicly filed AIF and risk factors. Okay, so EnWave really is a business that's looking to exploit a drying technology that offers a distinct value proposition in multiple markets. We've separated ourselves from the competition in that we have developed continuous machinery that has the most scale and the most reliability when processing high-value food products and cannabis products. We also dabble in R&D in the pharmaceutical side, but that's more long-term and has not yet been proven commercially. Because of this competitive advantage, harnessing the power of vacuum and microwave, we've employed a licensing royalty business model, which we'll get into in a moment. But the fundamentals of the technology is that by applying a vacuum, you can lower the atmospheric pressure within the machinery. And when you do that, you lower the boiling point of water. Therefore, you can control the temperature at which water is removed uniformly from the material, allowing for better retention of nutrients, colors, flavors in food products, and creating some pretty unique textures. And in the cannabis industry, the retention of terpenes, THC, and CBD for use in either combustible or extract products. Microwave is harnessed because it penetrates the entire product load. So it allows you to have flexible final moisture content, which is vastly different from the incumbent technologies that we compete with, being freeze drying, air drying, spray drying in the food space, and the room and rack dry methods that you often see in the cannabis industry. So more about the specific benefits. Why do companies decide to buy machinery from EnWave and pay us a royalty to harness the value proposition? Well, we talked about the temperature control, but also the time difference of the process. So in the food industry, you're looking at typically 25% of the time that it would take to dry the same amount of material using those other incumbent drying techs. And in the case of cannabis, we're drying in 2 hours, whereas it's taking multiple days to dry and cure a smokable product in industry currently. And also the footprint in the cannabis industry tends to be far smaller than the room square footage required to dry the same amount of product, which allows the licensed producers to allocate more square footage to growing. Also, the speed to market for cannabis is improved, and the propensity for bioburden to take place in their materials is reduced, so less costly batch write-offs.
Brent, one question. Would that also mean ESG-wise that with using that much less time, that also the GHG emissions are really going down? So I mean, that could be a big advantage for your clients, right?
Precisely.
Because you need less energy.
Well, of course, and it comes really down to the source of the electricity, which is the primary input for our machines. And of course, when directly compared to freeze drying specifically, we're using about 75% of the energy that it would take to produce the same amount of product using freeze dry. So there is a material difference, but not one typically, honestly, that is analyzed by our licensed partners before they make a purchase decision. It's more based on timing, quality, and overall cost based on those factors and a reduction of labor. So I mentioned we are active in the pharmaceutical industry. It's more of a blue sky opportunity for us. We have been working with Merck Pharmaceutical for several years now, developing a continuous GMP qualified process to dry several vaccinations. I knew when I was given the opportunity to lead this organization that it was going to be resource intensive, and without the internal expertise, it could be a black hole for money. And so we decided to partner with a industry leading producer of dehydration equipment called GEA Lyophil, based out of Germany. And so our joint development agreement with GEA is such that we will leverage their internal know-how when it comes to GMP manufacturing, and also allow them to build the larger scale GMP vacuum microwave equipment for partners in the future. EnWave will take a share in terms of the revenue generated from that if it becomes obviously something substantial. But at this point in time, right now it's mainly R&D projects and one-off tests. Most recently announced, we have a material transfer agreement in place with AstraZeneca to dry monoclonal antibodies. So this is on the back burner, but food and cannabis are driving revenues today. Mm-hmm. In regards to monetizing this patented technology, exploiting the value proposition, we have 4 primary revenue streams. And the first that we're focused on building the most is our royalty revenue. Through fiscal year 21, which ends at the end of this month, we'll be in the range of about $1 million of third-party royalties being paid, with several other large-scale equipment being tabbed for installation within the next month and a half or so here. So for fiscal 22, we anticipate the royalties jumping up to between 1.5 and 2 million next year, and then provided guidance to the market for another up to 10 large-scale machines to be purchased next year, which would equate to approximately another 2 million in royalties. So by 2023, our goal is to have at a minimum around 4 million in royalty revenue coming through to our business. That's the near-term targets. Obviously, we'd like to do better than that, but I think that's reasonable given the pipeline of new business we have. Royalties are pure margin. So obviously we want to get to the point where those royalties can more than cover the expenses of our business in its entirety, and the remaining can fall to the bottom line along with the margin that we get from the sales of our machinery, our second revenue stream, to be paid out either in dividends or buyback stock. We'll always have an open dialogue with our shareholders to do what's best to create more value for them. In terms of the machine sales, we don't give these machines away for free.
Brent, sorry, 1 second. And those royalties are unlimited, meaning you get the royalties as long as the machine is in use.
Yes, there's a term that is uniform in all 50 commercial licenses we've signed, and it is the life of our intellectual property portfolio, the last patent to expire. And we've filed for new patents to further protect our licensees as recently as this year. So call it a 20-year life that can be extended based on new intellectual property being developed and filed for in the future. So for all intents and purposes, hopefully in perpetuity, but at this point, guaranteed for 20 years.
Okay.
So on the machine sales side, we have, again, scalable machinery, ranges at an entry point of 260,000 Canadian for the smallest bat scale unit, more appropriate for initial market launches to justify the business case and then hopefully compel companies to deploy additional CapEx, all the way up to north of $3 million for certain GMP certified equipment. So we can provide machinery that's appropriate for any size of business, many different applications, and they are off-the-shelf machines. Important to state that they're not customized in a meaningful way. We basically will augment the amount of vacuum and microwave that is used throughout the process to provide the desired outcome for the user. So, that know-how is a huge portion of that intellectual property that we provide to our licensees. The third stream of revenue that we're looking to start up in Q1 22, which will obviously begin October 1st this year, is our toll manufacturing division we refer to as Revworks. And so we have decided to create a large-scale continuous drying line here in Vancouver for the purposes of accelerating getting REV-dried products to market. Many companies will come and they'll test and they'll develop products and say, well, to make a $2.5 million investment and not really knowing how the market's going to react to this new product innovation is a bit trepidating, especially for middle management. So we wanted to give them a platform to take meaningful amounts of product to market, again, justify that business case, and then make the decision to deploy CapEx and bring manufacturing in-house in order to reduce cost per unit and obviously increase profitability as a licensed partner of EnWave. So it's going to be an acceleration tool for our sales program. And lastly, NutriDried Food Co. is our operating subsidiary we started in 2013 as a proof of concept to show that our large-scale equipment worked. It wasn't just a promise, it's actual reality. And thankfully, this startup proof of concept has turned into a meaningful part of our business, peaking at 29 million in top line revenue in 2019, and then pulling back, as Jochen alluded to. We had some challenges in 2020, which I'll get into, and now we've got it back to a turnaround where the expense outlay in that business is appropriate for the size it is, and we've diversified some of the revenue streams there, which I'll get into. But the potential in terms of the growth and the size of impact that NutriDried could make to EnWave is definitely material. I'll talk about that in a moment. So quickly skim over this slide. Research shows that both the air-dried food, freeze-dried food, and global cannabis markets are growing at robust compound annual growth rates. The total addressable market, as we see it, is north of 269 billion as of 2026, currently 165 billion. So for us, we feel like the opportunities are quite robust for us to pursue. I mentioned that we had 50 current commercial licenses. This gives you an idea of some of the companies that we partnered with. REV Foods, which is a global top 5 dairy company. Calbee, one of the most well-known snacking companies globally and the dominant player in Japan. Our most recent announcement was with Dole, massive vertically integrated fruit and vegetable company. Also working with the U.S. Armed Forces to develop military rations to improve what they're offering to their warfighters. And then a smattering of different cannabis companies, both in Australia, New Zealand, throughout Europe, and North America, are adopting our technology because of the distinct value proposition that we offer. So a bit more on NutriDried. You got a question, Jochen?
My favorite.
Yeah, there you go. So NutriDried went through, as I mentioned, a tough time in 2020. We hired a new CEO back in 2018, and he ran the business trying to grow it as fast as possible. And perhaps the expense outlay on certain marketing aspects weren't pulled back fast enough when the business started to slow down due to the inability to meet with certain buyers through COVID. Obviously, face-to-face interactions are key in that industry. And also, more critically, is our Costco distribution ceased in 2020, in that they often rotate different products through different divisions. And that's all the whole part of like that treasure hunt mentality of the Costco consumer. And so anyways, the expenses weren't reduced to match up with the size of business. And it got to the point where our board of directors decided to make a decision to restructure. And so with that, we brought on a new CEO who's far more pragmatic and works well with our team in terms of the outlay of growth that we should foresee with NutriDried, and also diversification away from a purely branded product play to selling in bulk. So we're selling a material amount of dried cheese right now to other CPG, consumer packaged goods companies, to be used in snack mixes. Did about just over $1 million in sales in Q3 alone for bulk sales, and that's tabbed to be a growth driver for this business. We're also going to be introducing a new product format to the market in 2022. I don't want to ruin the surprise right now, but it's a different shape, let's call it, of the product. And it's already been presented to some of the buyers at Walmart and Whole Foods and Costco and others. And the feedback has been overwhelmingly positive. So we're anticipating that will be another driver for NutriDried to turn around the story in fiscal 22, and hopefully provide bottom line profitability again, and obviously long-term growth. And obviously NutriDried is a far different business than EnWave's royalty licensing business. And so we plan to hopefully build this to the point where either a financial or strategic buyer acquires the business, continues to be a licensee of EnWave, paying us ongoing carried interest or royalties, and grow it themselves.
So when will it come to Europe?
Well, we have
I'm still waiting on it.
Yeah. We'd be happy to export if there's buyers there that want to distribute it. But we also have a number of European-based licensees that are producing the same product under different brands. So we have Patatas Fritas based in Barcelona, Spain, that will be launching their Just This product line, which is a mimic of moon cheese. We have a member, REV Foods, producing a similar product commercially under REV Explorers, and a handful of others. They're all doing the same in their respective geographic regions, with different cheeses that appease to the taste profile that's preferred in those respective regions. Just this past year, so September to September 30th year, 21, we've signed a record number of deals, new agreements with adoptees of the technology and evaluation agreements. So 10 new royalty-bearing commercial licenses have been signed, 7 R&D. We've sold 14 10 kilowatt, which are smaller scale units. At the beginning of the year, we had a goal of selling 10, so we superseded that. We've also sold 3 large scale units, which are about $2 million in sticker price each. Our goal is for 5. The month is not over. We have 15 days to hopefully meet that 5. And, we're optimistic that we have an opportunity to do so, we hope. And then moving into fiscal 22, as our goal is to sell 10 large scale machines and 15 small scale machines, 10 kilowatts, given the pipeline we have of current licensees that need to scale up their manufacturing capacity, and also new projects, again, both in the food industry and cannabis. If we look at our historical performance, like I mentioned, best year ever in terms of new agreements being signed, but also the best year ever in terms of the, we refer to them as kilowatts, the scale of the machines, like the total kilowatts sold has been increasing steadily since 2018. We had a flash in the pan during 2017, right before the cannabis market took off in Canada. What we're seeing now is more sustainable growth in the number of machines that can be sold to our portfolio of royalty partners. I'll take a moment now just to highlight 3 specific relationships that we have out of the 50 that are really exciting. It was an absolute pleasure to work with Dole since late last year on a number of product development pieces to enhance bringing new, nutritious, and innovative snack products to market throughout many geographies that they're present in. And so the end result of that initial work is that they've committed to signing a license agreement with us, purchasing a 10 kilowatt for their pilot plant to continue market testing. And they've also been introduced to several of our current royalty partners to procure the raw materials to sell under their brand in specific regions, which is net positive for EnWave, because the more product they procure from our partners, the more royalties we get from our partners who already have manufacturing capacity. Longer term, assuming that these launches are successful, Dole plans to bring manufacturing in-house. So what we can expect from Dole over the next, call it 12 months or so, is hopefully commitment to large-scale equipment to be placed within their manufacturing ecosystem. That's on the snack side. We also have conversations ongoing with certain ingredients where we feel that we stand out when compared to other drying options for them, and will allow them to differentiate themselves in the marketplace. So really happy about being engaged with their top executives. Like just this morning, I was talking with 2 of their board members essentially about the plans for the next 12 to 18 months. So lots more to come there.
Yeah, and I mean, it would make really sense for Dole to dehydrate parts of their fruits, as we all know them here in Europe, of course, with their bananas and all those kind of things, right, from the supermarket. But we all know this is like fresh food, and this can rotten immediately if not handled with care and in the right way. So it would make really sense for them to, let's say, dehydrate already some product where they produce the fruit, right? Because then you can ship it much easier and you have less weight.
That's a great point. And so as a secondary opportunity to the snacking opportunity, which is imminent, would be the conversion of fresh raw material into shelf-stable format so that they reduce the wastage and obviously reduce the cost of getting rid of that waste. So there are a few different attractive economic opportunities within that larger ecosystem that we're working on concurrent with the snacking project.
Great.
And so the second partnership I'll highlight is with Calbee, as I mentioned, a leader in snacking globally, have already purchased 3 of our 10 kilowatt units and have launched product to market for premium fruit snacks. They're planning to do a line trial on our 100 kilowatt unit in the early calendar new year. And we're going to get the result from an investment decision meeting coming through in April of next year, which will mean they'll either move forward with larger scale equipment or not. Right now, we're very optimistic about the project. So we hope that that would be the first of many that they would introduce to expand their manufacturing capacity as they grow that portion of their snack portfolio. And the last one I'll highlight, I mentioned the U.S. Army. Just wanted to show what they're actually doing. And it may not come across as the most visually appealing, but it is efficient, right? We're consolidating as much caloric content into bar form that's going to be appetizing for the soldiers and also be shelf stable and not have any bioburden issues at high temperatures while out in the warfield. And so the first application, which is likely to be issued into a ration pack, is on the bottom left. It's a dried cheesecake. So this is consolidated, shelf-stable dried cheesecake. Tastes amazing. Texture is nice and soft and chewy. I would buy it at the store and eat it personally. This is not the old military rations that you wouldn't want to ever consume unless you were forced to. This is actually a very appetizing ration, and it's gone through the process of evaluation internally. The U.S. Army's now bought a second 10 kilowatt to place at an industry partner site, a company called Bridgeford Foods in North Carolina. They're going to continue to produce this product for further test work. And ultimately, the U.S. Army has been approved for up to $2 million US in funding to buy large-scale equipment from us next calendar year. But we can't confirm it's a lock, stock, and barrel until that funding is released by the government. But it's all looking promising for continued growth of this relationship. And introduction into their systems. Talk a bit about the cannabis outlook for us. When we first sold machinery into the cannabis industry, it was in the domestic market here in Canada. And to be frank, we had no idea whether this technology would work the way that it needed to provide that premium end product that had all the attributes that the consumer is looking for, i.e. the visual appeal, obviously the THC and CBD and terpene retention, and also the smoking properties. So is it going to be a smooth smoke? Does it have white ash, et cetera, for the connoisseurs? And we had several machine sales to Canadian LPs, some of which didn't work out as those businesses struggled to get their houses in order. That being said, it did allow us to put our name out there in the industry and start to do more research and work. And that's what we did. We connected with a few marquee partners and got our hands on the raw material, the cannabis, and we're able to generate new processes that can yield a 20% increase in terpenes when compared to traditional room or rack dry, and actually a bit more THC and CBD, which we're still trying to understand how this is occurring, but these are the results that we're getting. And we've basically compared apples to apples here. So we're not doing rev dry one batch and air dry another batch. It's the same batch. I've gone different paths to being dehydrated. And then we get them tested by third-party facilities, get the certificates of analysis, and we use that data now to compel further companies to adopt our technology, given that it's faster, it's less costly, and you're getting a more premium product. It's really a no-brainer. When we pitch to new introductions, they're like, too good to be true. But now we can actually show them, like firsthand, this is the result, and that's all the difference for us. So we feel that the cannabis market is a huge opportunity for EnWave. Not necessarily domestically right now, but more so in the United States. We feel that it's a more mature group of companies that have the opportunity to grow substantially in the coming years. And we have one MSO, multi-state operator in Illinois, that's bought a large-scale machine that'll get installed next month. And we have several others in the queue, which I hope to discuss in the very near term here.
So that would mean to you like a multi-million-dollar business in the future.
We hope it to be. And you look at the market size right now, it's 21 billion globally. 80% of the market is in the United States. It's anticipated to grow, as we went through on the total addressable market, grow up to 56 billion by 2026. So sizable growth, and still the percentage of the market expected to be in the US is to remain consistent. So we do believe that this could be a material part of our business on a go-forward basis. So to share a bit of this data that we collected, it's one thing to talk about, but next thing is to show it. Here are several of the strains that we tested that went through vacuum microwave and went through the traditional room rack dry. And here are the results in terms of the terpene retention within these strains. So on average, as we said, 20% more terpenes seem to be able to be retained, which is of value to the company and ultimately the consumer when they're choosing what products to use. I'll quickly speak to Revworks. I summarized it during the revenue stream slide, but just a few more reasons why we're starting this. Of course, it reduces the CapEx up front for companies to take product to market. And I mentioned it increases the speed to market, but it also allows us to gain better understanding of the nuances of certain product applications being processed from start to finish within our technology, which we can then leverage into other relationships, those companies that are buying machinery for in-house manufacturing. This also will allow EnWave to grow a sidebar business unit, which could evolve into something material in it itself. And of course, a toll manufacturing division would not align necessarily with a licensing royalty division. So this could be prospectively a second spin out if it grows into what we think it can. Status of the facility. So we're well on our way to completing. We expect the machinery to be in and operational within Q1 22. We are currently placing the drainage on the floor. That's why you see a gravel floor there. And it will be quickly pouring concrete this month and have the machines available. We have about a dozen companies that are in line to place their name on some manufacturing capacity within this facility that we'd be excited to announce once we get the facility up and running and sign on the dotted line in regards to those service contracts. Total investment for this facility, about $2 million, and we spent about 1.5 to date. We have more than enough cash on the balance sheet to support this, and about 15 million currently, with about another 500,000, as you can see, to spend.
What do you think might be the revenue stream, let's say, for the next 1 to 3 years? I know it's a forward-looking statement, but give us, let's say, a little bit of a feeling.
Okay. If we're going to look at the percentage of revenue, where is it going to come from for EnWave? My instinct would be that machine sales will be about 45%. NutriDried will be about 40%, 45%. And between the last 10%, there'll be a breakup of Revworks and royalty generation. So Revworks as standalone with a single 60 kilowatt line, we could anticipate generating somewhere in the range of 3 million top line. So not material amounts of revenue, but of course, if we max out that capacity, we can put a second, third, fourth line in if need be. The purpose of this, as I stated before, is an acceleration tool. This is to compel more and more companies to buy their own machinery, bring it in-house, and continue to pay EnWave royalties long-term versus us scalping a service fee to produce particular products for them via Revworks.
So for me, it looks like a revenue-producing showroom.
Yeah, exactly. It's going to be the best showroom feasible for our technology. They'll come, they'll see our pilot plant, they'll see full commercial line. Yeah, I'm really looking forward to starting this up. And then on to the financial profile. So, again, let's just be transparent about our performance. It wasn't that good. 2017, 2018, 2019, we hit a bit of a kick up in terms of NutriDried's performance with Costco sales, but then that reverted in 2020. And we went through COVID and we were restructuring. We reduced expenses significantly in the EnWave business, as well as in NutriDried eventually earlier this year when we did the restructuring in February. And we're now at the point where both business units are appropriately structured, and our core businesses support the current personnel that we have, and we plan to grow without having to add material amounts of new personnel. So through 3 quarters in fiscal 21, EnWave business unit is profitable, positive EBITDA of about $2.5 million, where historically EnWave parent company has lost money every year and rarely posted positive EBITDA on a quarterly basis. For NutriDried had a horrific Q1, Q2 of this year with the former management and the expenses overrun. The restructuring effort that we took in February had a full quarter of it being present, and that was reflecting Q3 numbers where we turned it from a negative 2.3 million EBITDA to a positive EBITDA in 1 quarter based on the expense reductions we've had and ultimately sales improvements through bulk sales orders and a realignment of where we're going to be deploying resources to push that business forward. So what we can anticipate in Q4 is something similar to Q3 in regards to a targeting of bottom line profitability on a consolidated basis. And then into fiscal 22, good growth from NutriDried again, and very good growth from EnWave, given that we're doubling our guidance in terms of how many machines we anticipate confirming.
What are your total liabilities there, the $7.2 million? What is that? Is that like debt, or is that from leasing, or what is that?
No, it's minor debt tied to NutriDried borrowings, like non-material. Total liabilities would be just payments out to suppliers for different components. So there's no material debt in this business whatsoever.
Exactly. So you have no net debt.
Yeah, it's de minimis.
Yep.
And of course, like I mentioned, cashed up, and then turnaround in Q3. So a positive EBITDA of 937,000 alone just in Q3 based on the restructuring we had done, and obviously execution on the sales and business development side, which is encouraging for the future.
And Q4 would be again positive.
Well, that's what we're hoping. We haven't closed that out yet. We've got 15 days. And as I said, a few machines to confirm, and NutriDried's continuing to get good wins on distribution increases. But we're optimistic that this trend will continue. So just quickly on EnWave's business unit alone, I mentioned like the massive improvement this year on the machine sales and royalty side. This includes some intercompany payments, so like the royalties from NutriDried that's been paid to EnWave, which eliminate obviously in our financial statements. But it goes to show you that this licensing business model is sustainable and profitable, and it will only get more profitable as we continue to deploy more and more machines, diversifying the royalty portfolio. Our gross margins are very healthy, 49% year to date in fiscal 21, and we're anticipating that to continue. Net profit for the first time ever. So we're, again, bullish, we're confident, and it seems to me that we have the right team right now to execute on our plans to move forward. Which brings me to our targets for fiscal 22. So again, we'll continue to be very shrewd when deploying resources to invest in our business. We'll do that strategically, and we'll continue to leverage third parties to drive our business forward. One thing I didn't mention during this presentation thus far is we've increased the amount of outsourcing for the manufacturing for our machines. We've also increased the amount of channel partners that we have on a global basis. We now have 11 organizations representing our technology in different regions of the world, trying to drive new leads back to our core group to negotiate licenses and deploy machines. That's worked out quite well, given the past 3 licenses we've signed in Australia came through a channel partner, as well as a few others are percolating in Europe and Japan. We'll also continue to work closely with our current royalty partners to make sure that we take the opportunity to convert them into additional manufacturing capacity, repeat orders, which is always a great sign that both the technology is working and also the products are selling, which is a good leading indicator for future royalty growth. And then the cannabis industry, as we talked about, our primary focus will be the US market. We filed for 2 additional patents tied to the processes to dry the cannabis. We refer to one as Terpene Max. That will allow us to further differentiate the offering versus incumbents and prospective competitors that may emerge. If competitors do emerge that are tangible, we'll certainly entertain M&A, but at this time, our moat is quite wide and deep, and we don't feel like there's anyone nipping at our heels when it comes to vacuum microwave. We're targeting consolidated net profit both in Q4 and for fiscal 22. There's a few agreements we need to get done this month to get Q4 done in that manner, but certainly for fiscal 22, that is the goal. So why EnWave? EnWave, the 20-year overnight success story, right? Like we've had our ups and downs in both business units, some starts and stops. COVID didn't help us with that, but that's no longer an excuse. We have to continue to grow the business. And where we're at today is we have NutriDried business, which is structured properly and has tremendous upside both in bulk sales, the expansion of their branded snack portfolio into different formats and new inclusions, which we feel will compel some of the bigger distributors in North America for taking us on and drive growth. And then on the EnWave side, we're running a profitable business. The number of licenses are growing at a record rate right now. The number of large-scale machines that we're deploying are ever increasing. And the proof that our technology offers the best drying solution in the cannabis industry is there now. So really, it's up for us to push over a few additional dominoes, and what we believe the rest will fall, because it's a no-brainer given the advantages that we can provide. On the capital market side, our stock has been relatively depressed over the past several months, given we know of one particular shareholder that's been looking to exit their position due to the size when compared to their assets under management. We're working through that right now and feel once we can do that, the stock will be allowed to breathe again, because that's not an accurate reflection on the progress that we've made in recent months. And with that, maybe ask Jochen if you have any additional questions before we wrap up.
Super. Thank you very much, Brent. That was a great presentation, great update, and I'm fully online with you that your stock really should be much, much higher what you guys have really achieved. So maybe one last question from my side. The blue sky pharmaceutical potential you have, is that also maybe something where maybe COVID could help, because I have the feeling that we need many years longer vaccination. And if I look, for example, let's say on the BioNTech thing, which has to be stored at minus 70 degrees, and then you can hold it minus 20 degrees. This is just a real logistical effort, right? And I could imagine if we could, let's say, dry the vaccination for COVID or any other stuff would make, a lot of things easier.
Yeah, so certainly the global pandemic increased the level of interest in evaluating our technology by many big pharma companies. AstraZeneca is only one that we're speaking to right now to do trials. And the second is Merck. I did mention this. Merck published a white paper about the use of our technology for vaccine dehydration. And it came out that we can reduce the cycle time from between 80 and 90%. So a dramatic difference in timing of production, which allows more to go through and obviously less cost, and still remaining the same level of efficacy and uniformity in drying. So that's fallen into the lap or the hands of a lot of innovation directors in different pharma companies, whom will likely either do test work at our facility in Vancouver or at GEA Lyophil's facility in Germany. GEA has bought a machine from us to do the initial proof of concept testing. We're hopeful that we'll sell several testing units next year at the clip of about $250,000 in value each. Nothing, substantially material in terms of revenue generation, but the start of something that could evolve into a material revenue stream for us in the future.
You always have to start small before you grow it big.
Exactly.
Super. Brent, thank you very much. That was a great 36 minutes here. I love it. And
20 minutes. There's lots to talk about. Apologies.
There is a lot going on. And I think the most important message, which is for the market, you guys make money. And you came over the COVID-19 thing, and NutriDried is back on track, I would say. And things really improve. And let's look forward to fiscal 2022.
Absolutely. Thanks again, Jochen.
Super. Thank you very much, Brent. Yeah, ladies and gentlemen, that was Brent Charlton, the CEO of EnWave. And you heard it. The company is in very good shape, super shape, I would say. And things are really looking good. This fiscal year will close in approximately a good 2 weeks for them. And we look forward to the numbers then, because I have a good feeling that Brent will use those lasting 15 days to do some more business. And because I fully trust him. And also I have a good feeling for 2022. And what I really like is, on the one hand, a solid base now in the business, growing on all sides. Revworks is something, as I said it's a showroom making money. This is also not really common. And I think they're doing the right things, but I also like the blue sky pharmaceutical potential. So time to get into EnWave, time to look at the company really now. And thanks for watching us. Bye-bye from Switzerland.